Welcome to Lawyer on the Line.
Welcome back to the Lawyer on the Line podcast. I'm your host, Roger Riedmiller, and we are here to discuss insurance and the many different insurance policies in automobile accident, truck accidents.
Good morning. I'm Mark Scott, also one of the attorneys here at Riedmiller Anderson Scott. And that's a great topic to discuss. It's surprising how many different insurance policies we run into in this type of a case.
I don't know that we can get it all in 20 minutes, but I listed 12 different policies of insurance. It's crazy. But the first and foremost thing you have to know is a little bit of law. In Kansas, if you're involved in an automobile accident, whether it's two vehicles or a truck and a truck or a vehicle and a truck, we're initially a no-fault state.
Sure.
So each driver looks to their own insurance policy, and that's the first type of insurance policy. It's called a PIP policy. What does a PIP policy provide us, Mark?
Okay, a PIP policy, like you said, we are a no-fault state. That sometimes is considered a misnomer, though, because fault is still an issue in Kansas. But what that really means is that when we have a crash and you have a policy of insurance that covers your vehicle, or if you're a passenger or a pedestrian, there's insurance there from your own policy that come into play. And that is, again, the PIP, or the Personal Injury Protection No-Fault Benefits. Within that, there are base requirements in Kansas for what we have to have or what an insurance company must sell. So the basics are $4,500 in medical expenses. There is a rehabilitation type benefit that is for occupational retraining. That one's also a minimum of $4,500. There is a wage loss benefit that the base limit is just $900 a month, or 85% of your income, but not to exceed $900 a month. And sadly, that's a limit that was set so many years ago that it needs to be changed, because $900 is just not even close to what most of our clients are earning in a month.
$900 a month. That's ridiculous.
Right. And so then we have a couple that people don't hear about so often. One of them is a very important benefit that's called essential services, or also substitute services. And that's for reimbursement to an injured party for if they're having to hire somebody to come in and do things that they normally would do, but for the injury. So classic example to me would be taking care of the lawn in the summer. You have to have a neighbor come by. You can pay them and get a partial reimbursement for what you pay. The reimbursement is up to $25 a day. It's not a huge benefit, but it's payable for 365 days. If you do the math on that, that does add up. So one of the things we look at when we're dealing with our clients is how can we maximize recovery from all the benefits that you've purchased. So that's one of them. And then in a death case, there is a funeral benefit of $2,000 that can be paid for the funeral expenses. And also if there's a death, then there is, instead of wage loss, there is a survivor benefit that does a partial reimbursement for wage loss. Again, 85% of the deceased monthly income, or up to a maximum of $900. You can buy higher levels, though, right?
Right. Now, what's crazy about it is, and I want to talk about this before we go on to the other insurance policies. PIP policies are cheap. They make up a very, very small portion of your monthly bill on your automobile statement. So you really be surprised how cheap it is to increase that limit. You should increase your PIP limit to the maximum your insurance company will sell. It's pennies on the day to increase it to the maximum limit. You'd be surprised at how cheap it is, but it really doesn't come into play until you're in an automobile accident. Then you really wish you had upped the limits, because it really is helpful. I think some policies will pay as much as $27,500 in medical pay. And we all know how expensive medical care is. So get that maximum. Lost wages, I think the highest I've seen is $2,400. Have you seen?
I have seen a higher limit. The big thing that you can also raise on that limit is the base wage loss under the under the $900 a month is just for 1 year. Catastrophic injury, that's not going to get it. So when you raise your limit, you can also get it for either 2 or 3 years. So that's a big benefit of that.
So this is something you can do right now. Talk to your insurance agent, your insurance company, if you don't have an agent, and get that limit on your no fault or PIP coverage raised to the maximum that they have. And again, it's going to cost you pennies. It's not very expensive.
And before you switch into another gear, one of the really big benefits of having that raised limit, especially on the medical side, is it pays $1. So you're not going to be stuck with a deductible before it starts paying or copay. Once it exhausts, then there could be copays from other types of insurance that we'll dive into also.
And it's really easy. All of the test is whether or not the medical bill is reasonably made necessary by the accident.
Exactly.
So it's really easy. Okay. Now, the second policy I want to talk about is liability. Now, we talked about no fault on the first policy. Liability has a requirement. In order to get to liability in Kansas and not be stuck with just the no fault pay, you must have $2,000 or more in reasonably related and necessary medical bills, or a fracture of a weight-bearing bone, or a disfigurement, or permanent disability. Have I hit them all?
You have hit them all.
Okay. And if you have one or any of these, then you can make a liability claim against the person who caused your accident. If you don't have these, you're going to be limited to recovering just your medical bills, and I think you can recover lost wages, and that's
Correct.
it.
Yeah, those are classically called economic damages.
But you can't recover pain and suffering. Your claim is extremely limited. But if you do meet the threshold, the liability claim comes from, or the liability insurance, I should say, comes from the insurance policy of the person who was at fault in the accident. Now, there are excess coverages as well. I wrote that down as kind of a subcategory. How do we get to excess coverages?
Well, excess coverage would be similar to like an umbrella policy that you might buy for your policy. Not all insurance companies offer umbrella policies, but like State Farm does. So what that is, if you have a policy limit of, let's say, 100,000, you can buy an umbrella that would cover damages in excess of that. They do generally require, I think it's usually 250 or 500,000 on your liability before you can get an umbrella. But that's very good coverage to get to protect yourself.
Excess coverage could also come in the form of bad faith on the insurance company. If you have $25,000 in medical bills and you have a lot of pain and suffering, and you're going to need lots of future medical care, and the other person who caused the accident has a $25,000 policy, when you submit an appropriate demand documenting your losses, if they don't pay the policy limit of $25,000 immediately upon, or almost immediately upon, within a reasonable period of time, which isn't very long, after you serve the demand on them, then that insurance company can be held responsible for any excess in greater than a liability judgment greater than the $25,000.
Yeah, that's a good quick overview. It's a very detailed subject that we won't tackle, but yeah, you're absolutely right. That's one way that you could get to a higher level of coverage, or at least monies.
So, but let's go back to PIP. You get your medical care through PIP initially, but many people only have the $4,500.
Right.
What do they do for their medical bills? What's the next insurance?
So the next insurance that you would look to is health insurance. Or if you don't have a traditional health insurance policy, could be Medicare or Medicaid that would step in and be on the hook for the rest of the medical bills. Now, those would be subject to, at least with private health insurance, your deductibles and copays. You really wouldn't fall into that with Medicare and a supplemental type of a senior policy too.
How would you get health insurance to pay because they're going to look at you and say, well, now, wait a minute, you have auto insurance,
Right.
no fault policy. How do you get them to pay? What triggers?
So once your own car insurance pays out their full medical benefit, whether it be $4,500 or $27,500, they'll send out what is called an exhaust letter. And then that letter gets given to either your medical providers or your health insurance company specifically. And once they see that the car insurance has paid all the medical benefit that it has available, then your health insurance has to kick in and start paying.
So you're saying that not only will health insurance, you kind of jumped the gun on me. The next two categories were Medicare and Medicaid.
Right.
You're telling me that Medicare and Medicaid will pay auto accident related injury bills once you exhaust the PEP coverage.
They will. And what they will do, they will say that those are conditional payments. It's conditioned on them paying. And if you make a recovery against the person that caused the crash, then Medicare may have a right to get reimbursed on those. Sometimes you can negotiate that down, but that's correct.
That's a complicated process, is it not?
Most definitely.
Because it's not just a simple analysis of whether or not you're making a full recovery, correct?
That's correct.
So if you get Medicaid or Medicare to pay your bills, you better at least talk to a lawyer.
Yeah. Medicaid has to assert their rights if they want to get money back. Medicare, you are required to notify Medicare of your claim. You are required to figure out if they have paid and get them reimbursed. And if you have an attorney involved, they can be responsible. So anytime there's Medicare involved, you want to be very, very careful. Make sure you know exactly what they've paid and what they may be claiming back. Sometimes you'll find that they're claiming things that aren't related to the crash, but you can dispute those type of things.
Now, another type of insurance that I've dealt with a number of times that have come into play is those situations where my client was rear-ended by someone who was uninsured. Where does someone go to look, or what kind of insurance policy are we talking about for that?
Sure. So again, we've talked about liability insurance. Every vehicle driven in Kansas is required to carry insurance. And part of your insurance is liability coverage, but there's also what is called underinsured and uninsured motorist coverage that is under your own policy. It's a benefit you're paying for. So if the other person that causes the crash doesn't have insurance, you can make a claim against your own insurance company for uninsured motorist coverage.
Don't they kind of step in and act just like the liability policy?
They do. They step into the shoes of what we call the tortfeasor, the at-fault driver. And if the at-fault driver is responsible, then you can collect against your uninsured motorist carrier.
So it's kind of crazy, though. Your own insurance company is going to defend that guy that rear-ended you, basically, right?
Yes, they are.
Okay. So again, if you get stuck in a situation where someone is uninsured, you need to make sure they're uninsured. I've seen a number of situations where they declare they're uninsured and they turn out not to be. How do you find out if someone's uninsured or not?
Well, there's a number of different ways you can do it. You can try to get an affidavit from the driver, but that can be pretty difficult. But what I find is we can actually speak to your own insurance company because they don't want to pay unless they have to. And they will do a deep dive into their systems and through the insurance brokers to see if that person's name shows up on any policies. And so oftentimes you can get your own insurance company to do that legwork to prove whether or not there is any liability insurance from the at-fault driver. So that's generally how we are able to figure out if there's any coverage.
Now, you jumped ahead of me just a bit on underinsured motorist coverage. Now, that's a different beast. If I understand correctly, the liability policy only has, say, $25,000 in coverage, but your claim is worth $100,000, $200,000, $300,000 because you were severely injured. You're underinsured in that situation. How does that work out?
Okay, that some very specific things that have to happen. But first off, your underinsured motorist limit, what is available will be your limit minus the liability recovery from the tortfeasor. So if the tortfeasor's insurance company paid their full limit of $25,000 and you had $100,000 Underinsured motorist policy, you don't really have 100 available. You have your 100 minus what you recovered, the 25,000. So your 100,000 policy actually has $75,000 of underinsured motorist benefits that are available.
We tried to get that changed in the last legislative session, and I think they're getting closer. But
Yes.
it's almost as if you got $100,000 policy of underinsured motorist coverage, and the other driver had 25,000, you don't get that 25,000 from your insurance company. You lose it.
Right. You do.
But you're paying for it. You paid for it all your life, right?
Yes. But here's the bigger problem. Say the other person has $100,000 policy and you have 100,000. Well, you don't have any underinsured coverage available because your limit is the same as their limit. So there's been some attempts to have the legislators redo the statutes. So your $100,000 in underinsured motorist coverage is completely available. Waiting for the day that law gets changed.
Absolutely.
Because there's some instances, such as if you have a $25,000 policy and the other person also has a $25,000, well, you're paying for underinsured motorist coverage of $25,000, but you're never, under that scenario, going to be able to reap what you've paid for.
So I agree with Mark 100%. Don't get stuck in that situation. Here's a little known secret. It is, again, pennies per month to get high UIM coverage. Just talk to your agent. You'll be amazed at how cheap $250,000 of UIM coverage actually is. And if you want to step in talking about UIM, you can get an umbrella policy that's a UIM policy, correct?
There are certain companies that do have an umbrella policy that includes underinsured motorist coverage. Not all the carriers do that. But so you do have to shop and figure that out.
Yeah, ask for that. And I did that with my insurance company and got a high limit. It really was cheap for a very large umbrella policy. So in the event that you are severely injured in an accident, you have a very large limit to take care of your losses.
Yeah. What I tell clients, and unfortunately I meet people after they've been injured, but the thing you got to do is protect yourself from people that are either uninsured or underinsured. Because if you get hit by somebody with just a $25,000 policy and you've got a catastrophic injury, you need every penny that you can get to help you survive the rest of your life. So talk with your agents about what it would take to increase your limit from where you are right now to a higher limit. I see so many people carrying $25,000 minimum limits, which is all we have to carry in Kansas. And that just in this day and age, with the expense of medical expense and the fact that people are now making more money than they used to, $25,000 is very insufficient to protect yourself.
Now, another type of insurance that's around available for automobile accident victims, especially in this area, because we have so many military dependents and folks in the military, are VA and TRICARE benefits.
Sure.
And they do have some federal rights, correct?
Yes, they do. So you can, once your PIP was exhausted, if you're on VA coverage or TRICARE, then just like with private health insurance, they would step in and start paying the medical expenses, again, subject to whatever your deductible and copay may be. But there's a big difference with TRICARE when they have a right to get reimbursed for what they pay if you make a recovery against the at-fault person's insurance policy. But they can take all the money. So in a catastrophic case, if they've paid, let's say, $150,000 in medical expense and you only collect $50,000 from the person that caused the crash, they can take every penny. And I've seen them be that aggressive.
Now, one other type of insurance I want to talk about before we run out of time is some people are injured in the course and scope of employment.
Yes.
They have work comp coverage. My understanding of the current status of the law on that is if you make a recovery in a liability claim against somebody who caused an accident and your medical bills and your benefits were paid by work comp has a right of reimbursement. However, it's limited to the duplicative recovery that you make
Right.
against the person who caused the accident.
That's correct. So if there is let's say a loss of consortium type claim in the liability side, the work comp doesn't have a claim against any monies that are awarded for that. But for any money that's awarded for wage loss, for the medical expenses, they have a right to get reimbursed. They do have to cover a portion of the attorney fee for the recovery of that money, but they can come in and take a large part of a settlement.
And it's very key that if it is a work comp auto accident, you have an attorney that knows how to handle both, because in many cases it's to your advantage to settle your work comp claim before the personal injury claim in between those insurance policies.
Correct.
All right, we are just about out of time. Once again, thank you for tuning in to Lawyer on the Line podcasts. You can catch us again at any time at lawyerontheline.com. And I'm Roger Riedmiller.
And I'm Mark Scott.
Have a good day.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.